Okay, we're going to go over the 2-point sheets that were assigned yesterday. Okay, the calculating gross pay and the pay stubs. So let me bring this up. All right, so this first worksheet is the calculating gross pay. So there are 8 scenarios in which you will have to determine what their pay is for their pay period, or what their earnings are for their pay period. Right, so number 1 says you get a job in Iowa, you're paid minimum wage, you work 15 hours this week, what's your gross pay? So this is going to be relatively simple, right? 15 hours of work times $7.25 pay per hour means that your earnings are going to be $108.75. Bigger so you can see it. Okay, so number of hours times your wage per hour, $108.75. Number 2, you work in Iowa, you get paid minimum wage, you work 46 hours a week, what's your gross pay for the pay period? Okay, this one is a little bit different. If we followed the same format, okay, we'd say 46 times 7.25 equals whatever, but we can't do that, right? Remember that when we work more than 40 hours a week and we're getting paid by the hour, okay, any hour over 40 is paid overtime. So instead, we have to make that 40 hours, right? So the first 40 hours, we get paid $7.25, so that's $2.90. But then for the other 6 hours, okay, we are going to earn 1.5 times $7.25. All right, and so 6 times 1.5 times 7.25 is 65.25. So now we're going to add those together. 290 plus 65.25 equals 355. Oops. 355.25. All right, for number 3, you get a job in Colorado. State minimum wage is $11.10 an hour. You work 48 hours this week. Okay, so this is going to be similar to the last question, question number 2, except now instead of $7.25, we have a different wage. So the first 40 hours, we're now earning $11.10 an hour. That is $4.44. Okay, and then for the other 8 hours, these are overtime hours, so we're going to be paid 1.5 times the $11.10 an hour rate. Okay, and that comes out to be $133.20. So again, we're going to add these up, 444 and 133.20. Okay, and that equals 577.20. All right, number 4, you get a job pays an annual salary of $36,000. You get paid every 2 weeks. What's your gross pay on this paycheck? So we're going to take the salary, $36,000, and divide it into the number of payments that we're going to receive, right? So that we know how many pay earning periods there are. If I get paid every 2 weeks and there are 52 weeks in a year, okay, that means that I'm going to receive 26 different paychecks, or there are 26 different pay periods. All right, so I'm going to take that 36,000, divide it into the 26 pay periods, and that comes out to be 1384.62. Okay, number 5, your job pays 36,000. You get paid monthly. In this case, if I get paid monthly, there will be 12 pay periods. All right, so 36,000 divided by 12 becomes 3,000 earnings each pay period. All right, number 6, annual salary, 36,000. Get paid 2 times a month. Okay, so that's semi-monthly. All right, so here we're going to take our 36,000 and divide by the number of pay periods, which would be 24. Okay, so 36,000 divided by 24 then becomes 1,500. Number 7, you get a job that pays $18 an hour. You get paid every 2 weeks. Week 1, you work 43 hours. Week 2, you work 38 hours. What is your gross pay for the paycheck? So in this case, can we still do the number of hours times the wage? 43 and 38 would be 81 hours times $18 an hour. Can we do that? No, we can't, right? Can we break it up so that 80 hours times our normal wage, and then 1 hour at 1.5 times our normal wage, since that would be 81 hours? No, we can't. Okay, so the overtime hours is 40 hours a week, even if the pay period is every 2 weeks, even though the pay period is every month. Okay, it still has to be calculated on a per week basis. So we need to calculate week 1 and week 2 separately and then add them together. Okay, so for week 1, we work 40 hours at $18 an hour, okay, which is $720, plus we have 3 hours earning 1.5 times $18 an hour. Okay, and so that is $81. So 720 plus 81 equals $801 for that first week. Okay, for week 2, we work 38 hours. 38 at $18 an hour is pretty straightforward, right? That's $684. Okay, now we're going to add these up. 801 plus 684 is 1485. Sorry, typo there. 1485. All right. And then finally, number 8, you get a job pays an annual salary of $51,000. You get paid bi-monthly. For this pay period, you worked a total of 87 hours. What is your gross pay? All right, so 51,000. Whoa. 51,000 for my annual salary. I get paid semi-monthly, bi-monthly, semi-monthly. Okay, so that would be twice a month. Okay, so there are going to be 24 paychecks. So I could try to do something like this, but then how do I incorporate the 87 hours, right? If it's bi-monthly, that's roughly 2 weeks, just slightly more than 2 weeks. Okay, it's possible that I worked more than 40 hours in one of those weeks, maybe in both of those weeks. Okay, so how do I incorporate that overtime pay when I have an annual salary? The answer is I don't. Okay, remember that when you have an annual salary, it does not matter how many hours you work. So whether this person worked 87 hours over the 2 weeks or 110 hours over the 2 weeks or 45 hours over the 2 weeks, okay, it doesn't matter. The pay is the same. All right, just like I said, I'm a salaried earner at Linmar. Whether I work 10 hours today, 8 hours today, 14 hours today at school, okay, I'm going to get paid the same amount. All right, so in this case, it's just 51,000 divided by 24 gives us 2125. Okay, so the 87 hours was there just to kind of throw you off a little bit, give you extra information, but it is completely irrelevant or unnecessary when calculating the pay on this paycheck. Okay, cool. All right. Let's move on to the second worksheet then. Okay, get that out of the way. We've got these pay stubs. All right. So we've got 3 pay stubs on the second page, and we've got these questions to answer based on that. So number 1, what is Jane Brown's employer? If I come over here, Jane Brown. So the employer is, who does she work for, right? In this case, Jane Brown works for Hamburger Palace Enterprises Incorporated. Okay, pretty easy. Number 2, how much did Jane earn before taxes on this paycheck and before taxes for the year? So before taxes on this paycheck, okay, is right here. That is her earnings. So $240 on this paycheck before anything came out. All right, for the year is your YTD, your year to date. So YTD, year to date, simply means so far during this year. In this case, this pay period ended on March 14th. So this YTD, the year to date, that's how much she's been paid, or how much she has earned so far during the year up until March 14th. All right, so her earnings before taxes were deducted on this paycheck, $240. So far during the year, $3,300. All right, number 3, what's her hourly wage? Well, if we're right here, if she worked 20 hours and she earned $240, let me show you what we would do. It would be $240 divided by 20 hours gives us a rate of $12 each hour, right? Or if we switch that, right, 20 hours times $12 an hour gets us that $240. Okay, so it's $12 an hour. Number 4, list all of Jane's deductions. So deductions, again, are anything that subtracts money or takes money out of your check, right? So she's very easily got this voluntary deduction here of meals. So she's having some money come out of her paycheck each month, probably that goes to like a cafeteria, right, account. So she can go down to the office cafeteria. But then she has the required deductions, these 4 taxes: federal income tax, Social Security, Medicare, and state income tax. Okay, so altogether, she has 5 deductions. She has 5 expenses that are coming out of her paycheck each month. Okay, 4 taxes and then 1 optional deduction for meals. All right, number 5, getting into Peter Smith. Okay, what pay period does Peter Smith's check cover? So if I look at Peter Smith, he works at the Banana Bread Box. His pay period, his paycheck is the 6th, so August 6th through August 12th. All right, please note though that this is, even though 6 to 12, right, you might be inclined, if I asked you how many days this covered, you might be inclined to just do 12 minus 6 and say cover 6 days. That would be incorrect. Okay, the 6th through the 12th is actually 7 days. If you think about, the previous pay period would have ended on the 5th, right, the day before this. So the previous pay period ended on the 5th. This pay period ended on the 12th. That's 7 days later. Okay, so if the previous pay period ended on the 5th, this pay period then is 7 days from starting on the 6th to the 12th. In other words, we would take 12 minus the day before our start. So 12 minus 5 is 7 days, right? If you count it out, you get 7. 6, 7, 8, 9, 10, 11, 12, that's 7. All right, so make sure that when you're given a range, okay, whether it's a range of dollars, a range of dates, whatever, you can't just take the ending date minus the starting date or the ending dollar minus the starting dollar. Okay, you actually have to, you can do that, but then you have to add 1, right? Or in other words, you have to take the ending minus the previous ending. So whether it's, again, a dollar range, a date range, you have to take the end minus the previous end. So it would be 12 minus 5, so 7 days. Anyway, number 6, how much federal income tax has been taken out of period checks so far during the year? So we've got federal income tax, and then we've got these two numbers. The first one, 7056, that's current, so that's on this paycheck. The question asks for the year so far. Remember, YTD, year to date, means so far during the year. So in this case, his year to date federal income taxes that have been taken out is $859.68. All right, number 7, how much did Peter contribute to a retirement plan? If we go back into our key terms, 401k is a type of retirement account. So if we look at his paycheck, he had $60 deducted into a 401k. So $60 coming out into his retirement account. All right, and then number 8, how much is Peter's take-home pay? Another term for take-home pay is net pay. So that's right here on the paycheck, $364.82. All right. Last page stub is with Mary Stone. Number 9 asked, where does she work? She works at the Dance-O-Rama. Number 10, how much is her salary on this check and what is her salary on the year? So again, we can see that she's a salaried worker. On this check, she earned $448. Okay. As I was looking this over briefly at some of the submissions, okay, I think the most common incorrect answer for the second part of number 10 on her yearly salary, a lot of students put this. Okay. Yes, the Y means year, but that is not her yearly salary. That's how much salary she has earned so far during the year. This pay period goes until July 15th. So this is how much she's earned from January 1st to July 15th of this year. That's not an annual salary. That's 6.5 months. All right. So in order to determine what her annual salary would be, what her earnings would be for the entire year, we have to look a little bit deeper. We have to kind of become a detective a little bit and look for clues. Okay. So if I look here at her pay period, right, July 1st through July 15th, that's 15 days. That's the first 15 days of the month. Okay. So that suggests that she's probably getting paid twice a week. This 15 days is not a weekly pay period. It's not a monthly pay period. It's not every 2 weeks. Okay. It's half a month. So she's going to receive 2 paychecks each month. So if she gets 2 paychecks each month for 12 months, that tells us she's going to get 24 paychecks or 24 pay periods. If her salary on each pay period is $448, we can take 24 payments or 24 pay periods times an earning of $448 per period. Okay, tells us that her annual salary is $10,752. Okay, so make sure that you understand that in order to figure out somebody's annual salary, you need to know how long of a pay period her paycheck covers. Okay, you can't just assume that it's a week, every week or every month or something. I mean, you have to actually look. In this case, her pay period is half a month. Number 11, how much money was deducted from Mary's paycheck? So there's 2 ways that we could go about that. We could just add up these deductions, these 4 taxes, okay? Or we could take her salary, her gross earnings of $448, and subtract out her net pay of $349.21. Okay, either way is going to get us the same number. 448 minus 349.21, okay, is 98.79. Okay, where did that 98.79 go? Well, it went to these taxes. So we could, if we wanted to, add up these numbers. Okay, either way, it's going to get us the same number. All right, so you can either add up 4 numbers, subtract 2 numbers, whatever, it'll get us the same thing. So she had $448 in earnings. How is that broken up? Well, she kept $349 of it, and almost $99 of it went to taxes. Okay, and then number 12, how much has Mary been paid during the year so far? So that's the year to date, right? Year to date means so far. So she's been paid $58.24. Fantastic. All right, let's go ahead and walk through the remainder of that presentation then, the 2-point earnings and income presentation. Okay. Okay, So now we're going to go into calculating deductions. So we kind of previewed this yesterday. We talked about how deductions lower our net pay, right? It takes us from our gross pay down to our net pay. We did that pay stubs worksheet where you got a little preview of what some of these deductions are. All right. So what gets taken out of your check, as we said, right? We learned how to calculate gross pay yesterday, whether that's a yearly salary, a wage, whatever. Okay, we're going to talk about deductions, which gets us down to our net pay. So deductions are anything that are subtracted from our paycheck, right? If you deduct something, you are subtracting it. Okay, so anytime that we're talking about deductions, we're talking about subtractions from our paycheck, right? Something that lowers the amount of our paycheck. All right, so there are two types of deductions. There are pre-tax deductions, and then there are the actual tax deductions. All right, so pre-tax deductions are taken out of your paycheck before you calculate your taxes. So it reduces your taxable income. Okay, so for example, let's say on this paycheck I earned $2,000, and let's say that I had a $400 pre-tax deduction. Okay, that would lower my earnings from $2,000 down to $1,600. Now I would only pay taxes on that $1,600. So it reduces your taxable income. It reduces the total amount of taxes that you have to pay. All right. So examples of pre-tax deductions, things like having student loan repayments come out of your paycheck, money that goes into a retirement account, money that goes toward purchasing your health insurance, money that goes into flex spending accounts for medical expenses like going to the hospital, prescription drugs, doctor visits, things like that. There are flex spending accounts for childcare. So money that goes into an account specifically for like daycare or preschool or private school. Okay, those can all be taken out of your paycheck before you calculate your taxes. All right, so you subtract these pre-tax deductions, then you get your taxable income. Your taxable income is the number of dollars that are actually taxed. Okay. So, for example, again, let's say that you're in $6,500 this month. You have $1,200 being deducted to cover your health insurance. You have another $300 deducted for your retirement account. Okay, so that's $1,500 that's being deducted before we need to calculate our taxes. All right, so our taxable income would be $5,000. So even though we earned $6,500 this month, we're only paying taxes on $5,000. All right, so obviously that's going to save us money. All right, so pre-tax deductions can be a way to save money on your taxes. All right, so let's talk about the 4 taxes that can be deducted from your paycheck. Okay, the first one is Social Security. Okay, this is 6.2% of your gross pay. All right, so remember that when we're converting a percent into a decimal, we drop the percentage sign, we move the decimal 2 spots to the left. That would be the equivalent of 0.062 as a decimal. All right, Medicare is 1.45% of your gross pay. Again, if we converted that to a decimal, that would be 0.0145. All right, we have federal income tax. We use what's called a tax table, all right, in which we have what's called a progressive tax system. Progressive means that it increases as my income increases. So if I have very low income, okay, the percent that I pay in tax is going to be much lower than somebody who has a high income level, right? As my income goes up, the percent that I pay goes up, all right? For now, we'll assume 15% for this, all right, or 0.15 if we convert it to a decimal. This won't always be the case. We'll actually later in the week or early next week, we'll talk about how to actually calculate what our federal income tax is, okay? But for now, if you're not given any other information, you can assume it's 15%, all right? And then we have state income tax. This varies by state. Every state can create their own system, okay? Iowa, like the federal tax, has a progressive tax. Okay, so again, a lower income means you pay a lower percent, higher income, you pay a higher percent, unless otherwise told, okay, we'll assume 5% because of this progressive tax. And I should point out, it's progressive only for now, okay? We'll talk about it in a moment. The law, actually, a new law was passed in February of this year that's gonna change that, all right? But for right now, for the next couple of years, it's still a progressive tax. So again, what is a progressive tax? A progressive tax is a tax in which the average tax rate, the amount that you pay in taxes, okay, increases as your taxable amount increases. So as your income goes up, the percent that you pay in tax goes up, okay? Progressive, if you progress, right, you're moving, you're growing, right? So it moves from low to high. The result being that the tax rate, okay, is higher the more you earn, and the average tax rate is actually less than what's called the marginal tax rate. You don't need to worry too much about these terms right now. We're going to get into them more later in the week or early next week. All right, but I do want to at least introduce these terms to you so you're somewhat familiar with them. All right. One of the most common questions is, why do we have a progressive system? Why wouldn't it make more sense, or wouldn't it be easier if everybody just paid the same percent? And yes, that would be easier, but it is often not desirable. All right. Because if I am a very low income earner, right, if I'm only earning $30,000 a year, if I have to pay 20% in taxes, all right, that's going to be really hard for me to pay versus somebody who's earning $300,000 a year. Their ability to pay 20% of their income in tax is going to be much easier. All right. So a progressive system is not based on equity or simplicity. It's based on fairness. Okay. So progressive taxes are imposed in an attempt to reduce the tax incident. In other words, the amount of tax that people have to pay as their ability to pay is lower. Okay. So a low ability to pay, meaning a low income level, means that you pay a smaller percent of your earnings in taxes. Those who have a very high level of earnings have a higher ability to pay taxes. Okay. And so we ask that they pay more into society, right? So all governments need to collect money, revenue to operate, right? They do so through taxes. So, the government collects money to pay for fire departments, police departments, to pay for roads, to pay for public education, to pay for parks, right? All of those types of things that allow society to operate have to be paid for in somehow. Okay. And so taxes are one way that they can collect revenue. All right. And so they're saying, if you are very successful, if you are a high level income earner, right, you can pay back more into society because you have the funds to do so. Those who have very low ability to pay because their income is very low, we ask that you pay less of your percent into it. Okay. Again, it's not based on equity, it's based on fairness. Okay. The opposite of progressive is a regressive tax. Okay, regressive tax are especially hard on low income earners. Okay, so now it becomes harder to pay when you have low income, and it becomes easier to pay. You pay a lower overall effect the more you earn. All right, so that's a brief little introduction to the four taxes and what a progressive tax is. Like I said, we'll talk about progressive taxes more later on. Okay, but let's talk right now a little bit more in depth about these four taxes. Okay, so the first two taxes are known as FICA taxes or payroll taxes. Okay, FICA stands for the Federal Insurance Contribution Act. That was the law that created the Social Security Fund and Medicaid. Okay, so Social Security pays for retirement benefits, current and future retirement benefits. Okay, it pays benefits out to widows and widowers. So if somebody is married and the spouse dies, okay, and that spouse was working, okay, that the living spouse, the widow and widowers, now have their livelihood very much affected, not just from an emotional state, but from a financial state. So Social Security is there to help them out. Social Security is also used for disability benefits. All right. As I said, Social Security is 6.2% of your gross earnings, or 0.062. All right. So for example, if you earned $24,000 this month, or sorry, $2,400 this month, how much Social Security tax would come out? Well, we would do very simply $2,400 times 0.062, and $148.80 would be the amount that comes out. Okay. So essentially 6.2 cents of every dollar. Okay, so you're just doing 0.062 of $2,400. All right, Medicare is the other form of FICA tax. It's the other payroll tax. Medicare pays for health insurance for those who are 65 and older. Okay, so it's government-funded health insurance. If you follow the news, if you're into politics, okay, you might know that there are many politicians that would like to expand Medicare, not just for those who are 65 and older, but for all U.S. citizens. Okay, many other first world countries, developed countries throughout the world have government-funded healthcare. All right, we're one of the very few that have privatized healthcare. Okay, and so this may change in time. Okay, but for right now, Medicare is for those who are 65 and older. Okay, 1.45% or 0.0145 of your gross pay is taken out for Medicare. All right. So again, if going back to that $2,400 example, if you earn $2,400 this month, how much would be taken out from Medicare? Okay, we would do 2,400 times 0.0145, and that is $34.80. All right, so those are the payroll taxes. Those are FICA taxes, and then we have income taxes. We have two income taxes. We have the federal income tax and state income tax. Federal income tax goes to the federal government, the national government. Okay, the state income tax would go to the state government. Okay, so both are the revenue for how those operate. Federal income tax applies to everybody throughout the country, okay, because it's a national system. So this is when a percent of your gross earnings goes toward one of the two governments, whether it's your federal government or state government, okay? How much you have to pay, the percent that you pay is based on several different things. Number one, based on your earnings. Number two, it's based on how you fill out this taxable form called your 1040, okay? Your 1040 form identifies how many dependents you have. As you can probably read and see and hear in the word dependents, okay, the root word there is depend. So a dependent is somebody who depends on your earnings for their well-being. So my son, for example, he's 8 years old, doesn't have a job, he's a bum, right? He depends on my income and his mom's income for his well-being, all right? So he is a dependent of ours, okay? So most children, if they're still living at home, right, especially young, right, infants, toddlers, adolescents, right, they're gonna be dependents. But dependents don't have to only be children. My mom is 70-something years old, right? If it were determined that she could no longer live independently on her own and she moved in with me, right? If she was dependent on my income for her financial well-being, right, there can be adult dependents as well. All right. Other things that influence the percent that you pay, your marital status. Okay. So whether you're filing as married, single, married, but file separately, whether you're head of household, so on, all of those things impact your taxes. Okay. As I said, in the US, the federal system is the federal income tax is a progressive tax. Okay. So the more money that you earn, the higher percent you pay in taxes. Okay. And again, why do we not just have a flat tax? Because this is based on fairness, not simplicity. Okay. It's not designed to be simple or equal where everybody pays the same percent. It's based more on fairness. Okay. This is an example of what the IRS tax brackets were last year. Okay. So you can see that these are the different marital filing statuses. Okay, single, married, filing together, filing separate, or head of household. You can see that as your income goes up, right, you go into a higher and higher bracket. Okay, and again, don't worry about this so much. We'll talk about this when we get into the next topic, when we actually look at how to calculate our income tax. Okay, but the big thing here is just to see that as your income goes up, these tax rates go up. Okay, that's what's meant by a progressive system. All right. With the state income tax case, states are free to set their own system. So every state has their own system. Iowa, as I mentioned, has a progressive state income tax. So again, here's an example. As your income goes up, as your income goes into a higher and higher bracket, okay, the rates go up. Again, this is based on fairness. Somebody who earns very little is going to pay a very low percent in taxes. Somebody who earns much higher is going to pay a higher percent. Okay. Now, as I also mentioned, this is changing. Okay, in February of this year, a law passed, both the Senate and the House within the Iowa legislature, that will convert our progressive state income tax to a flat tax. We will have, starting in 2026, a flat tax of 3.9%. So that means somebody who's earning $20,000 a year or $220,000 a year are all going to pay the same amount, 3.9%. So it's much simpler and easier to calculate, but it also can impact that issue of fairness and ability to pay. This will be much harder on low income earners. High income earners, the rich, will benefit greatly from this. This will reduce the amount that they have to pay. Okay, this will be very hard on low income earners as a greater percent now is being paid, and it's harder for them to budget that much into their paycheck to cover that. Okay, so whether you agree or disagree with that, in 2026, that's where we're going. All right. For now, though, we've still got a progressive system. We'll have a progressive tax system for the next several years still. So that's what we're going off of. All right. There are currently 7 states that do not have any state income tax. All right. So remember that if taxes are the way that governments collect money to operate, okay, if they don't have an income tax, how do they collect money? Well, let's look at some of the states. For example, if we look at Florida, right, what kind of citizens or what kind of people do we imagine being in Florida? Well, one, it's got a very large percentage of retirees, right? So retirees, by definition, aren't working. If they're not working, they don't have income. So it makes sense not to have an income tax in an area where a lot of people don't have incomes. All right. Instead, what do they have? They have people who are old, who are maybe rich, who own land or property, right? You also have a lot of tourists. Okay, again, tourists aren't earning the income in that state, right? They're earning the income from wherever they're visiting from. So Florida doesn't have an income tax because they tax things like property tax. They tax your land and your buildings higher. They have a higher sales tax. So those tourists who are traveling there, when they're buying things, right? When they're going to the gift shop and when they're buying gas and when they're going shopping, right? Whatever it is, they're paying a higher percent on sales tax. So that's how the state generates a lot of their revenue, right? If we look at Nevada, what's Nevada? Right there. What's Nevada known for? It's known for Vegas and gambling, right? Well, again, those who gamble a lot, that's a very volatile way of measuring your income. So rather than taxing the income, okay, they tax, again, they have really high property taxes and sales taxes. So people who own the land pay a lot of money in property taxes. Those who are traveling and tourists will pay a lot, right? That's also really nice because if I, from Iowa, go to Las Vegas and earn money there as income, right, I don't have to file income taxes in two different states, right? Whereas if I went to Nevada and they had an income tax and I earned money there, right, that would make things a lot more difficult, okay? So there is kind of a rationale why some of these states have decided to do this. If we look at just kind of a map of how the country is broken down, okay, the darker the state, the higher the highest tax rate is, right? So when we showed the Iowa brackets, right, the highest tax rate was 8.98. That's actually relatively high, right? Our Illinois, our neighbor to the east, has a flat 5%. So these states with the dots, those are flat taxes, okay? The grayed states are states without any income tax, okay, for a state income tax, right? You can see that California, Oregon, very high. Minnesota, surprisingly, is very high. Iowa was relatively high. All right. So you can imagine there's going to be those high income earners who would have been paying nearly 9% of their last dollar into taxes, right? Changing to a 3.9% is going to save them a lot of money. It's going to really hurt, like I said, those who are very low income earners. Anyway, okay. Let's get into some practice. So if you're still following along, if you're still with me, the bottom half of your page are just different practices. So I'll go through the first one together, then I'm going to turn it loose to you. All right. So in this first example, we have gross pay of $2,000. Okay. We need to calculate what our 4 tax deductions are going to be. So for Social Security, we're going to multiply that by 0.02. Okay. For Medicare, we're going to multiply it by 0.0145. For federal income tax, we're going to assume 15%, so we'll multiply it by 0.15. For state income tax, for Iowa, we'll assume 5%, so we multiply it by 0.05. All right, so we can go through, we simply are taking our gross pay or our taxable pay, multiplying it by the different percentages for each tax, okay? So in this case, Social Security is $124, Medicare is $29, federal income tax $300, and state income tax $100. So our net pay then would be $2,000 gross pay minus our 4 deductions. Okay, so minus 124, minus 29, minus 300, minus 100 leaves us with a net pay of $1,447. All right, so notice if our gross pay was $2,000 and our net pay was $1,447, that means we kept roughly 72-ish% of our pay. All right, so we kept 72%, which means about 28% went toward taxes. Okay, and that's pretty accurate. Okay, in general, you can count on anywhere between 1/4 to 1/3 of your check going toward taxes. Okay, so roughly somewhere between 25 and 33% in most cases is going to go toward taxes. So if I have a $4,000 gross earnings, I can expect at least 1,000, maybe 1,300 going toward taxes, roughly. All right. So here is your chance to work through this, okay? In the first example, in the bottom left corner of your notes, okay, there's a little check to make sure that you're good with this. Okay, so here's the scenario. You get paid $15 per hour. You work 43 hours. What is your gross pay? Calculate all of your deductions. One final note about deductions, okay? Medical insurance, payments for flex spending accounts, okay? Payments for student loan repayments, okay? All of those reduce all of our taxes, right? It reduces the 2 income taxes, it reduces the 2 payroll taxes or FICA taxes. Those are super easy, all right? 401k contributions get a little messy, okay? 401k contributions are not taxed at for the income taxes. So state income tax, federal income tax, 401k contributions are not taxed. They are still taxed, though, at the payroll taxes, the 2 FICA taxes, Social Security and Medicare. Okay, so they're taxed by 2 of the taxes, but not subject to the other 2 taxes. That makes things really difficult. Okay, so for simplicity for our class, okay, we're just going to treat every pre-tax deduction the same. All right, so whether it's a 401k contribution, whether it's money going toward our health insurance, whether it's money going into a flex spending account, doesn't matter. Okay, we're going to treat it all the same. We're going to say that it lowers our taxable income equally. All right. So then your final example, again, in the lower left corner of your notes, okay, now includes some pre-tax deductions. So in this case, you earn $3,500 on the month's period. You make the following voluntary contributions or pre-tax contributions. Okay, 150 into your 401k, 150 into paying for your medical insurance, $200 into an FSA, a flex spending account for childcare expenses. Those are all tax deductible. Those are all pre-tax deductions. All right. So then what is our gross taxable pay? So of that 3,500, how much is going to be taxed? Well, we're going to take our 3,500 and we're going to subtract the 150 for retirement, 150 for insurance, 200 for the flex spending. Okay. And that gets us down to $3,000. Now, even though we earned 3,500 this month, only 3,000 is going to be taxed. So we're going to use that amount to calculate our four taxes and ultimately get down to our net pay. All right, so I'm going to give this to you. Again, I'm going to turn this over, okay? I'm going to put the answers up here for you to check. Don't just copy these down. Try it your best, and then if you need to go back, you can check that. All right, for today, once you get through those notes, all right, and you check your work on those practice problems, you have a couple of assignments. They shouldn't take super long. The first is on the 2.1 page. There's 2.1 Ed Puzzle assignments. If you open that up, okay, there are two Ed Puzzle videos that you'll need to watch that are both only like about 4 to 6 minutes or so. That'll pause every 30 seconds, every minute or so, just to do a quick check on your understanding. All right, so go through, complete those. Even though when you get through the last question on that, it'll play the credits for about another 20 seconds. Make sure that you play the video all the way through and you hit the submit button to finish that up. Otherwise, I won't get a notification that you actually completed that. All right, so make sure that you watch all the way through, answer the questions, and then submit that. Then you've got a couple of videos if you would like to watch. But after that, you got this 2.1 deductions problems where it's going to be our first introduction to actually working on these deductions. Okay, so get that done and we will talk next time. See everybody.